And it's November 7th, 2023, right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning, coming to you live from Channels HQ right here in Lagos. Let's get the top stories that set your agenda now. We see the federal government has opened its subscription offer for 2-year monthly savings bonds to retail investors with a promise of higher return than last month's auction. According to a statement from the Debt Management Office, the government will sell a 2-year saving bond at 12.46% per annum, 139 basis points higher than the 11.07% it went for in October, while the 3-year bond will be sold at 13.46%, also higher than the 12.07% it sold for last month. The saving bonds offers opened yesterday, Monday, November the 6th, and closes by Friday this week, while settlement will be made on November the 15th. All right, let's get a check on the oil market now. See, global oil market prices slipped by 1% today, erasing most of Monday's gains as mixed economic data from the world's second largest oil consumer, China, and winter demand worries offset the impact of Saudi Arabia and Russia extending output cuts. Brent crude futures slipped 92 cents, about 1.08% to $84.26 a barrel, while recovering slightly after a dollar drop earlier, while US WTI crude was at $79.95 a barrel, down 87 cents, or about 1.08%. Both benchmarks gained about 30 cents yesterday after top exporters Saudi Arabia and Russia reaffirmed their commitment to extra voluntary oil supply cuts until the end of the year. We'll drill down on what else is driving sentiment in the market later on the show. To the grains market now, Chicago wheat futures slid for the first time in 5 sessions today, with the improved condition of U.S. winter crop boosting the 2024 supply outlook and adding pressure on prices. Chicago Board of Trade CBOT most active wheat contracts, WV1, fell 0.8% at $5.71 a bushel in early trade, while soybeans SV1 added 1/4 cent to $13.64 for 1/4 bushel, while corn CV1 gave up 0.5% to $4.75 a bushel. And Nigeria's creative industry holds a huge potential capable of contributing significantly to the country's economy. That's according to an official of the U.S. mission in Nigeria, Will Stevens. He made this known during this year's edition of Africa Creative Market Conference, which had the U.S. Assistant Secretary of State for Business and Economic Affairs, Ramin Tului, as well as creative industry leaders, entrepreneurs, and other stakeholders in attendance. On her part, an intellectual property law expert, Nabila Aguele, highlighted the importance of IP protection and enforcement framework in the creative industry. Take a listen.
Tell them, you have to send this to me in an email.
You see huge U.S. investment in Nigeria's creative industries. Nearly half of the investment that's flowed into the continent has come to Nigeria in the last years. Almost $100 million in the last year, half of which has come into Nigeria. And those numbers are going to continue to grow as our streaming services, music, film, books. It's a massive growth opportunity, and I think U.S. platforms are tremendously benefiting from Nigerian content, and they're looking to reinvest.
The creative sector is thriving in so many ways, and what's really been missing is a robust set of policies and frameworks and implementation that are very much in line with our times. So we have that. We have a recently updated Copyright Act. We have a Ministry of Arts, Culture, and Creative Economy. We have international organizations focused on the creative sector. So it's really to say, how can we be more strategic and organize ourselves as a sector to make sure that creatives are getting the best benefit out of what they're doing, that there's funding, financing flowing into those spaces, and funders are incentivized to bring in money, and that it is profitable for the creatives.
And with the cost of living crisis in Nigeria, the average consumer's disposable income is squeezed. The living are struggling to live right now, and losing a loved one definitely is not cheap, arranging for funerals. Well, let's hear more now from Sanlam Nigeria, formerly FBN Insurance. They've launched the Family Love Plan. To tell us more on how this works, we have Mr. Tunde Mimiko, MD/CEO of Sanlam Life Insurance, joining me right here in the studio. Good morning. Great to have you.
Thank you for having me, Ladi.
So, obviously, this is quite a grim discussion. At this point, nobody wants to, lose a loved one at this time. But these are the realities of life. Definitely, people die, and definitely it is not cheap. Burying dead at this point. And tell me, before we go into it now, tell me about Sanlam, Nigeria PLC. Tell me everything about this company and how you're navigating this insurance industry.
Thank you very much, Ladi. Sanlam Nigeria, formerly known as FBN Insurance, commenced operation in Nigeria September 1st, 2010. So we've been around for 13 years. The business was in partnership between the then First Bank and Sanlam. First FBN having 65% equity holdings and Sanlam having the remaining 35% equity holding. The business has grown organically over the years to become a leading life insurance company in Nigeria. Following the divestment of First Bank, FBN Holding in 2020 for strategic reasons, Sanlam decided to acquire the 65% equity holding and became the sole owner of the company. That led to us transiting from FBN Insurance to become Sanlam Nigeria in 2022, September 21st, precisely. Today we belong to the Sanlam Group, which originated from South Africa and has been in business since 1918. We are by far the largest insurer in the continent of Africa. We have our geographical footprints across Africa, and we are present in the major economies in Africa. We have over 154,000 employees, and we are very, very stable financially and very strong as well. Our purpose is to empower generations to be financially confident, secured, and prosperous.
Talking about being financially stable at this time, 2023 was a really tough year, for everyone, and I'm wondering, how you're navigating the insurance industry, right now. Incomes are squeezed, at this point. Some people, right now, their main focus is to eat, at this time. So tell me, how you, navigating the high inflation at this point, currency devaluation, how are you managing all of that?
Thank you, Larry. Insurance provides that succor at times like this. It's even at time that people need to have a plan. So no matter what your financial status is, whether you have a lot, whether you have little, or you are in between, we have a plan that can actually meet all Nigerians' need. So it is at this time that we actually need to embrace the culture of having insurance. As an organization, we have been fostering and engendering the government's financial inclusion strategy, and that's why we have our footprints across the Federation. We have quite a number of agents, and we keep pushing the narrative that insurance is required even at tough times like this.
All right, talk to me about, there are a couple of insurance companies, right now. Tell me what sets you apart, because normally we see, most of the time, we see Nigerians complaining about, not being able to make their claims and all of that, and the time wasting, that time lag in getting your cover. But tell me what sets your company apart from the others.
I did mention earlier that we have been in business for over 105 years now as part of the Sanlam Group. So we have the experience. Our word is our bond. So trust is very important when it comes to financial service that we do provide. So we do meet our clients at the point of their need. We meet up with our obligation as that when due. We're very innovative and very creative, and that's why we keep coming up with, we're pace setters when it comes to creation of products, when it comes to using technology to drive insurance and making sure that we make insurance accessible and affordable to all and sundry. So Nigerians should be rest assured that in dealing with Sanlam, you're dealing with a company that has the financial stability, the financial strength, and the wherewithal to meet up with our obligation as our when due.
All right, let's drill down now on your recently launched family love plan. You know, I did talk about reading my intro. You know, definitely it's quite expensive. You know, having to pay funeral expenses and all of that. Talk to me about this family love plan and the advantages of signing up to it.
So we did launch family love plan on the 3rd of October. We had an official launch 3rd of October, but we went to market on the 1st of October. It was for us a gift to the Nigerian populace to mark the 63rd anniversary of our dear country. How else can we show love to this country but to come up with a novel product of such nature? What does family love plan really entails? It is a plan that is a funeral insurance product that allows individuals to be able to meet up with the costs that comes with giving their loved one a befitting send forth should the unthinkable happen. So this policy, this product actually allows us to take care of that financial stress and financial burden that comes with having to contribute for a relative or a loved one's funeral when death does occur. You will agree with me that in one way or the other, we all have the responsibility and obligation to contribute towards the funeral of our loved ones when it does happen. Maybe it's our dad, our parents, our mom, uncles, whatever relative that you have, you'll be called upon likely to say, oh, this is your own contribution towards mama's or grandma's funeral. At that time, it might be a financial strain on you, but if you have a plan, this plan gives you the opportunity to have it done seamlessly without having a financial strain on yourself. So it provides for funeral benefits, it provides for first anniversary benefits. So the funeral benefit is a lump sum. When the unthinkable happen, Sanlam will make a lump sum available towards meeting all the costs and expenses that is associated with giving your befitting burial to your loved ones. The first anniversary benefit also pays the 50% of that lump sum to mark a remembrance of the loved one. There are benefits also regarding the burial repatriation, for repatriation of the post of the deceased. There's a cost associated with that as well. And there are also family income benefit that takes care of not just the funeral, but the dependents that have been left behind. They have to also be taking care of school fees, the cost of running their life will still...
So this plan goes beyond funeral expenses?
Yes, it goes beyond funeral. It gives family income benefits to the children or the dependents of the disease that we lost. There are also other benefits like the double accident benefits that pays a multiple of ×2 of what the funeral benefit is should death happen as a result of accident. What are the unique features of these products? Typically, insurance not typically excludes certain age. They're not eligible to be insured. What we've done is to say, irrespective of your age, your parents, if they are still below the age of 80, they are eligible to be covered under this policy. Typically, a life insurance cover will say once you're 65, you can buy cover for such. This policy allows up to the age of 80. This policy also allows you to buy for your loved one without necessarily buying for yourself. That's why we call it family love. You might not necessarily buy for yourself, but make sure that your loved ones are well protected.
So the policyholder could be anyone? Really?
It could be anyone. So you can buy, you are the policyholder, you are the premium payer, but you might not necessarily be part of the life assured. It gives you the opportunity to insure up to 10 members of your family that are close to you, be it your parents, spouse, uncles, your extended family that are defined in as defined in the policy. You also will agree with me that most people always feel, oh, we pay for insurance, we don't get anything in return. We have also factored in that into the design of this product to allow for a cashback, irrespective of what happens, whether there's a claim or not. You'll be entitled to a 6 months refund of premium after every 3 years.
All right, let's talk about affordability now. Definitely, who can apply, to be a policy holder? Does it matter if you're on the lower tranche of the earning, ladder? Like, who can apply really? If you're earning, say, maybe 15,000 naira or 20,000 naira a month, can you apply for such a cover?
I did mention earlier that, irrespective of your financial status, we have a plan for you. So this plan also took care of that by having 3 different variants. We have the inclusive, we have the classic, and the prestige plan that has different benefits depending on what you can afford. So irrespective of your financial status, there's something in there for you. So for as low as 5,000 naira, anybody can buy this policy.
Quite interesting. Tell me now, about the time span it takes for you to, make a claim. At this time, maybe you lose a loved one, and definitely the funeral expenses are upon you. How long will it take your company to start payouts?
Our promise is 48 hours upon notification and receipt of all the required documents. We do not exceed that. That is our promise. That's what we live by. And we have our processes supported by a very, very up-to-date technology that supports.
Because you also have to confirm that somebody is dead.
Yes, that's why it's within 48 hours we get all this done.
48 hours.
Yes.
All right. Tell me about the code. I know there's a code that you can, dial through to actually get this plan.
So you can get this plan by going to our website and click on the buy option, and family love option will be given to you there. You can self-service yourself, but you can also contact any of our agents that are across every touch point of First Bank in the nation. The code has to do with us settling claims when a road accident happens for motor insurance. We also launched our general insurance arm, Sanlam General, launched what we call a code of confidence, star 1056 #. When an accident happens on the road, instead of people fighting and having squabbles, they can just dial that code and we'll pay instantaneously while on the spot there.
Yeah, because definitely road rage is a real thing right now. People get really angry on the road. On the road. So you have to calm down and get that code. So looking at, the business, so far, what are you seeing, coming for demand for this product?
What do I see coming for?
Demand.
Demand.
Yes.
It's a product that actually addresses our social lifestyle right now. Like I mentioned earlier, everybody has an obligation or a responsibility to contribute towards the funeral of a loved one. So we do that from our out of pocket. What this product will do is give you a platform, a financial platform that allows you to plan, so that when it happens, the insurance company takes care of that responsibility rather than you do so. So this is not just a financial instrument, it's us as Sanlam being part of the social good, because it's our mantra to make sure that we care and show that we allow Nigerians and the entire populace to live with confidence.
Fantastic, and definitely we do pray that our loved ones live very, 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 very long. Thank you so much for launching this product, Mr. Tunde Mimiko, CEO of Sanlam Insurance Nigeria Limited. It was great having you in perspective.
Thank you, Ladi.
All right, so we'll take a break now. When we come back, commodities market update is next. We'll take a look at what's happening with the Naira. That's in a moment. Stay with us. right now there's a lot of volatility in Nigerian FX markets. Let's get a sense of what's driving sentiment with Dumebi Oluwole, senior analyst at FDC, joining me right here in the studio. Dumebi, good morning. Great to have you.
Good morning, Laddie.
Yeah, so last week we were celebrating the sudden, strengthening of the Naira, last week. No one expected it. And definitely we were happy, to see that. But definitely the currency speculators definitely were not happy about that. But it's a brand new week, but we're seeing weakening, right now. What's driving sentiment with the Naira?
I mean, it's still the usual FX markets, distortions or concerns that are still at play. Market participants continue to price in, distorted FX fundamentals against the Naira. But truth be told, the marginal depreciation that we saw yesterday, it was very temporary, simply because we're seeing a lot of back-end work going on from the CBN to ensure that the Naira is actually regaining its strength. So two things to note. We will continue to see the CBN clear its backlog of FX demand. As of today, a little over 12 banks have been serviced, and the expectations that this is going to continue. And we've heard from the Minister of Finance and the CBN governor as well that the commitments are renewed towards ensuring that FX backlog will continue to be met towards the end of the year and even at the beginning of 2024. So the other thing to know is that the 10 billion FX inflows, even though there's still a lot of unclarity as to whether the CBN has actually received this fund, we do know that external reserves have actually gone up by about 140 million between October 20 and October 30th. So what this means is that there's a little bit of leeway for the CBN to actually continue to defend the Naira. Another thing to also note is that supply concerns are still there, simply because it's a bit unclear as to how quickly and by how much, and by as to how consistent, how quickly, and by how much, and by the magnitude at which the CBN will continue to, supply FX to the official window, simply because they've been very ardent on the fact that they want to significantly close the gap between the parallel market and the official rate. So generally, what we're going to continue to see is that there will be this steady but mild appreciation in the Naira towards the end of the year. For instance, JP Morgan did say that they expect the Naira, the official rate of Naira, to close at 850. While that may seem pretty high for the official rate, we've actually seen the official rate touch 1,000 Naira at the FMDQ market, and even the official from the CBN's published data, we've seen the official rate of Naira touch 909 Naira to $1. So 850 is still quite conservative as to where the Naira will land. So generally, market sentiments are around 800 to 850 as the year-end closure of the market, meaning there will be some level of appreciation in the Naira towards the end of the year. And that does provide some respite to market participants, business owners, investors. But the key thing to note is the moves that the CBN is making are significantly, or will I say gradually, anchoring investor expectations and also anchoring speculative behavior. The truth is that speculators will always be there, but the key thing is to always ensure that FX fundamentals, especially in terms of supply, are consistent and they continue to flow into the market.
Let's talk about FX speculators. I did see a headline this morning talking about FX speculators hurting the Nigerian economy. And in my mind, when I think of an FX speculator, I see a trader. Trading sentiment. Okay, this might happen next. Maybe it's time to buy, or this might happen, maybe it's time to sell. So I'm wondering, are the speculators really the bad guys here?
Laddie, you're putting me on the spot.
I know.
But I mean, the truth is, like I mentioned before, speculators are always there, right? And they do not speculate out of thin air. They do speculate with current market sentiment. They speculate with price discovery. They speculate with transparency in the FX market. They speculate with moves of monetary policy as well. And like I mentioned, there's not so much to deal with, right? We do know that the CBN is expecting some funds that will support the Naira. We do know that CBN is gradually clearing its backlog. We do know that the CBN sees the true value of the Naira at around 650 to 750. But all of this price sentiment around where the CBN sees the Naira and what moves it's making, there needs to be a lot more transparency on a lot of that. So the market needs to be fully aware of what is happening in the FX market. If reserves are increasing by 140 million within about 2 weeks, we need to be able to tell where that money is coming from. So because there's a lot of eyebrows raised on where supply is coming from and how the CBN actually plans to meet its unmet FX backlog, that's exactly what speculators are betting against, and that's why they're still going long on dollar positions and shorting the Naira.
But at some point, the speculators can go long on the Naira.
Of course they can.
Point.
And that's why I'm saying, yes, of course it is. And that's why I'm saying sticking to FX fundamentals is the key thing here. And FX fundamental I'm referring to here is supply. And when it comes to supply, it's not only about today we see, there was some injection of funds into the FX market, but the market needs to be clear on where these funds are coming from and how significant they are going to be and how consistent they will be. Because there's one thing to supply about, let's say, 100 million to the FX market today. This is hypothetical, an hypothetical example now today, and tomorrow we see 60 million. Speculators will bet against that simply because it's not consistent. They cannot tell whether tomorrow it will be 200 or it will be 50 million. Do you understand? So that is exactly what it means when they speculate against the distortion in price discovery and transparency in the FX market. So it's not enough to say this is what is going to happen or this is what we're planning to do. You have to come out and say this is where we've gotten the money. This is how much we plan to supply to the FX market within a period of 6 months to a year. And most especially because we've gotten to the point where Nigeria's FX market, in theory and to an extent in practice, we're now, we're supposed to be in a free floating exchange rate market where market forces of demand and supply would actually determine the exchange rate. Exchange rate is the price now we're talking about. So what this means is, what we're seeing in terms of speculation, demand, and all of that, this is what a true FX market is like. Right. So if you do not do your part, the market will bet against it.
Don't expect these speculators to bet
that's exactly
in your favor.
Do you understand? So that's exactly where we are now.
Okay, let's look at our major FX source right now. Let's look at the oil market.
Yes.
What's playing out there? Are oil prices going to stay down or go up?
I mean, there are chances that, or the market expectations are that oil prices will remain high. They most likely will not touch $100 per barrel, but because of the current geopolitical tensions still ongoing, and Saudi Arabia and Russia decided to stick with their output costs till year end, OPEC is still quite conservative about supply, and we're seeing China's demand as well also rebound. So all of these events put together have given the oil markets quite a bullish run, and the expectations are that oil prices would remain high. Now, what this means for Nigeria is split into two ways. Number one is the higher import bill on refined petroleum products that could nudge oil prices, that could nudge petrol prices higher, and at the same time, it could mean an increase in revenue for the government because oil production has been picking up in the past months.
And we need to get our production up. We need to get it up. We need to get it up at this time. Thank you so much, Dumebi Oluwole, Senior Analyst, Financial Derivatives Company. Always great having your perspective. And I hope by the time we meet again this week, the Naira would have strengthened.
Yeah, a lot more.
A lot more.
Yeah.
Thank you so much.
Thank you.
Maybe. So let's head on to our next conversation now, looking at MSME funding. According to International Finance Corporation, MSMEs face challenges in accessing financing they need, resulting in a substantial finance gap of $5.2 trillion in developing economies. In Nigeria, nearly 40 million MSMEs account for 62 million jobs and approximately 46% of the nation's GDP. Despite their economic impact, MSMEs encounter difficulties in accessing credit, with an unmet finance gap of $158 billion, nearly half of the sub-Saharan region total of, and to bridge this supply chain funding gap, disruptive financing options have emerged, driven by technology. Let's find out from a report put together by Fiducia, supply chain financing company, and Stairs. That's an African data and insight company. Join us is Claire Fordile, senior consultant at Stairs. Great to have you on the show. Good morning.
Hi, Laddie. Good morning.
So could you give us a brief overview of the research and the report, including objectives and your key findings?
All right. Hi, Laddie. Good morning. Thanks for having me on the show. Our report is a data-driven report that seeks to illuminate the supply chain financing landscape in Nigeria. Like you mentioned earlier on, well, I'm going to start with, MSMEs and smaller businesses in Nigeria are the backbone of the Nigerian economy. And also it's the same case globally. MSMEs make up 90% of businesses globally and also contribute 40% of GDP in emerging markets. And down to Nigeria, the case is similar. Like you mentioned earlier on, they're responsible for generating 62% of jobs in Nigeria and also contributing nearly 50% to the Nigerian GDP. The MSME, small businesses, MSMEs are operational in every sector of the Nigerian economy, particularly in the retail and wholesale trade sector, manufacturing, education, and also agriculture. But we all are aware of the challenges that they face in accessing finance. And recently, newer financing models driven and enabled by technology have emerged that aim to solve the shortfalls of some of the existing solutions that are available or that are usually offered by traditional bank and non-bank financial institutions. And this is really important because Nigeria holds nearly half of the finance gap in the sub-Saharan African region, which is $158 billion. And so this report seeks to first of all, break down the issues of the challenges in the supply chain financing landscape in Nigeria, introduce the new technologies and solutions such as factoring and reverse factoring that have emerged that will solve some of these issues and ensure that MSMEs operating in the supply chain landscape are able to operate efficiently and make the provisions to their buyers, which are usually larger corporates, and also ensuring a continuity in economic activity in Nigeria and beyond.
Right, and since 2022, central bankers have been struggling to tame inflation. Some are seeing results at this time, but they had to raise rates really high, making cost of funds very expensive. What other challenges exist in the supply chain financing for MSMEs at this time?
Due to the sizes of MSMEs and how the fact that they have poor credit history or lack thereof, their size, it's usually very difficult for them to get loans or some sort of fundings from financial institutions or any type of financiers. And even when they do are able to get these fundings or approved, just like you mentioned, the lending rates are usually very high. Which makes it very difficult for them to either eventually take the loan that has been approved or access any sort of access any form of funding. Also, we know that because of the size of small businesses, especially the macro and small businesses, they lack collateral that banks or traditional financial institutions, usually require. All over the world, it's not just a Nigeria problem or Africa problem. MSMEs say that access to finance is the biggest issue that they have. And considering current macroeconomic realities in Nigeria and beyond, inflationary pressures, currency volatility, the foreign exchange markets, MSMEs are affected the most, which usually is disruptive to their operations.
All right, talk to me about factoring and reverse factoring. What is this concept and how does it work, especially in context of supply chain financing?
Okay. factoring and reverse factoring is an alternative financing method. What is special and different about these two models is the fact that the creditworthiness of the buyer is considered rather than the creditworthiness of the MSME, which usually is a barrier to their ability to access finance. And so in factoring, from financiers often called factor firms usually buy the invoices of these small businesses because of the buyers or the large corporates that they supply services and products to. In reverse factoring, the buyer of this product or this service, which is usually a large corporate, a large corporation or a large business, a larger business rather, usually leads their efforts in searching for finance for their suppliers, which are usually the MSMEs. So that's a distinct difference, or the benefits, the foremost benefits that factoring and reverse factoring offer over other existing solutions in the ecosystem. And recently, it's been enabled by technology and platform providers, making the process more efficient. Cutting the time of receipt of fund from as long as 90 days to as little as 12 hours.
Quite an interesting model, but I believe there's always a risk, with every model out there. Point out the risk with using this model, or what do you see coming as risk?
Oh yeah, definitely there's quite a lot. I'll start with the fact that it's a technology-driven solution, and so there's always risks such as consumer protection, data privacy, cybersecurity issues. So it's really important for these new platform providers to ensure that they have stable and strong and efficient cybersecurity infrastructure that would protect the users of this platform. So the financiers, the large corporates, and also the MSMEs, who are usually the suppliers of products and services. Another risk is because of how new the solution it is. The regulations and guidelines around issues such as financial reporting are still unclear. So it is important that stakeholders in the ecosystem collaborate with the government to ensure that clear guidelines for financial reporting are designed and implemented in Nigeria. I know so far there's been efforts by the FX Bank and also with the AFDB as well as the FCI, Factoring Chain International, to work together to ensure that factoring and reverse factoring guidelines are going to be designed and implemented in Nigeria and across different African countries that are currently adopting this model.
Right, we'll definitely keep tracking this model, see the benefits and risk, and how regulation is going to play out for this new model. Thank you so much, Claire Afodile Stairs, a senior consultant at Stairs. It was great having you today. Thank you.
Thanks for having me.
All right, and talking about funding, let's take a look at what's happening in the market now. I know a lot of MSMEs also try to go there, for funding, trying to get some of those short-term loans. And we have Will with the details there for the NGX, 0.40%, still maintaining 70,000 level. Good news, I guess.
Yes, good news for you. I did say that we would kick off in the green yesterday. Well, I hope we maintain that, momentum. But, we can't tell how the market direction can go. And I could be, wrong. But I hope I stay right.
Could this be a November to remember? I remember I said that one time.
Yes, November is the best month in the year.
That's what it's shaping out to be.
Yes, definitely. So we see the all share index yesterday going higher, 0.4%, still maintaining that 70,000 level, just slightly higher there. And then the equity cap, that's the market cap, 38.71 trillion in yesterday's trading session, added about 156 billion naira to the share price. Now we know Seplat, O&O, Boas Cement contributed to that positive performance. Now we'll look at the month-to-date and the year-to-date gains. Now we're seeing that month-to-date is now at 1.8% and year-to-date is 37.5%. Fantastic for the NGX. Let's look at total volume traded yesterday. We've seen it down, however, 4.71% in yesterday's trading session. 391 million units traded, valued at 7.71 billion naira. We said that 15.91% downtick for it. Deals up 6.23% yesterday. It closed at 6,837. Analyzing by sectors, we see in general, I think it was just the banking, oil and gas, and industrial goods segments that were up in yesterday's trading session. Consumer insurance were down. Insurance Mansard, profit taking in Mansard, pulled that back. Industrial goods basement really propped that up. We see UBA doing its thing for the banking counter on other tier 1 banking stocks. Now, oil and gas, I don't know how to say, Seplat and Oando really pulled their weight there. Now, let's bring in Phil Anegbe. He's head of research, Cardinal Stone Securities. Is going to give us more insights and backgrounds to what's happening in the market. Good morning, Phil. It's good to have you on the show.
Good morning, Will.
We see Oando climbing yesterday, nearly 10%. What's still driving Oando's uptrend? We see they had their AGM yesterday, fourth AGM, but not a lot's coming out from that AGM that would probably spike investors' interest. We've seen that they only released the 2020 and 2021 audited financial results. What's going on, Phil? What's driving Oando?
I think the interest in Oando is strongly linked to expectation that at the AGM there will be more information on the proposed acquisition of AGIP. So that acquisition story has been driving the stock for a while. We've seen bouts of profit taking. But net, I think that's the key thing. So everyone expected that at the AGM, there will be more information on that. And possibly maybe more information on recent results of the company as well. So put those together, you get to appreciate why people positioned ahead of that AGM yesterday. But not much, like you said, came off the resolutions there.
So not a lot. Quite disappointing for investors who are still holding on to Oando and believing for more. We'll keep track of that, Phil. But let's go quickly to GlaxoSmithKline, that's GSK. They received a no objection from the SEC yesterday for the dissolution of their business here in Nigeria. But we've seen that stock price jump in yesterday's trading session. So what are we seeing for GSK? What is going to be the end result for shareholders, and how do you see other companies that are towing this line?
Well, I think for GlaxoSmith, the key attraction here is that the company is going to be paying shareholders, I think most shareholders, 17.42 naira to exit. And that's very impressive relative to where share price were at the time the announcement was made. This is just over 12 naira. So that's why you're seeing a lot of interest. So today also you see a lot of interest in GlaxoSmith because people are actually positioning. I think if you go in today, even at limit up, you still get in excess of 15% return, which is decent. In terms of other companies that are towing this line, it sort of actually highlights the pressures companies are facing in the domestic market, particularly pressures around FX and trade route disruption. So that is forcing the hands of a lot of foreign linked companies to actually exit the Nigerian market. So the hope is that with the new government and the new initiatives being brought on board to actually stabilize the FX space, we are likely to see a reduction in those kind of exits from the Nigerian market. But then the reality is companies are facing a lot of pressures. I think about 40–50% of the companies that are listed in the Nigerian Stock Exchange have significant FX exposure. So it tells you everything you need to know. When they have to import a lot of their raw materials, and then FX crisis is intensifying. So those are the real issues, I think.
We just very quickly, if I let you go, we saw UBA really moving in yesterday's transaction. UBA dominated the trade by volume and value. It's about 100 million units of its shares traded. Just give us a back, story on that UBA. Just briefly, what's driving UBA currently? We've seen some moves going on there, but I want you to share it.
Well, I think the key drivers of UBA's performance, apart from the fact that there have been some director dealings, is that the bank actually has very strong fundamentals. Its recent results have been very good, and the prospects for dividend is also looking very good. So people naturally want to hover around such a stock. Decent earnings and decent prospects for dividends And of course, there's a lot of director dealings that sort of actually indicates or points to some sort of interest around the stock. Now, yesterday there was over 70 million units of the stock traded, and I think was crossed essentially. And the suspicion is that there was a lot of foreign interest linked to that move. So it sort of actually points to the fact that domestically we are seeing interest for the stock, and of course it looks like increasingly there's been a lot of foreign attention around the stock, which also is a good thing for the stock. Like I said, UBA, very decent bank, decent earnings, and there's prospects for good dividends going into next year. So expect to see a lot of activities around UBA for the rest of the year.
Okay, thank you so much, Phil Anegbe, Head of Research, Cardinal Stone Securities, for sharing your insights this morning. Many thanks for your time.
Thank you very much, Bill.
And so the NSD market didn't do well yesterday, down in yesterday's trading session, but I'll leave Ladi to tell me why that happened.
Well, profit taking. That's all I can think about.
Definitely.
Thank you so much, Will. Thank you.
Welcome.
All right, so let's get a check of what's happening in London. Now we have Juliana join us from our London studio. Great to have you, Juliana. So we're seeing Bank of England Chief Economist Hugh Pill there saying the UK inflation will soon fall in line with lower rates seen in the rest of the world. What is he seeing here?
Good morning, Laddie. Well, yes, Hugh Pill, he is a top economist at the Bank of England sitting on the Monetary Policy Committee. He was doing a round of interviews yesterday morning discussing UK GDP data, well, forecasting ahead. We're expecting GDP data on Friday. And really, as well, as part of that discussion, he was reflecting on the Monetary Policy Committee gathering on Thursday, where for the second time in a row, the rate setters decided to keep rates steady at 5.25%, but they're still at a 15-year high. Even though inflation is at 6.7%, it is 3 times higher than the benchmark rate set by BOE, which is 2%. And a lot of investors, economists are a little bit anxious about what is going to happen with interest rates in this country, because we know that the Bank of England are trying to hike them so that inflation can fall, but it's not really happened. So lots of suggestions that perhaps in the near future the Bank of England's benchmark rate may actually have to shift in order to stop them hiking rates, because it does have a knock-on effect in certain areas of the economy like mortgages, and we are seeing that is starting to trickle down in the housing sector. So yes, Hugh Pill did say that he does expect in the near future for rates to come down, but we're not expecting that to be for at least a year. Going back to what happened on Thursday, I think the big talking point really from the BOE meeting has got to be what they said about the economy, which is that it is likely to flatline over the next 2 years, and we won't see growth until 2026 in this country, and even then it would only be marginally by 1%. So as to be expected, as it always is wherever you are in the world, lots of talk, lots of mood music about where the economy is going and how Ukraine, now Israel and Hamas, and still some of the after effects of the pandemic are going to shape the future of the world's largest economies.
Right, everyone's still watching out for rates at this time, but we see information from social media platform TikTok says about 1.5 million UK businesses are signed up and using the platform, and it seems to be helping sales.
Yeah, this is pretty interesting data actually released by ByteDance, which is the Chinese owner of TikTok. TikTok, pretty famous. I've tried to get on it myself. I'm just not that great at it. But believe it or not, Laddie, hashtag TikTok made me buy it. If you used to put that in the social media side, it generates billions of views, and that's really how TikTok users in the UK have been able to benefit from the platform by using this hashtag, by using the new TikTok shop, which influencers can use if you're popular, you're Gen Z, and you want to go on a platform like this. You're able to sell, whether it's a mascara or a jumper or a mug, using that hashtag, using the shop, and TikTok have said that it's working. In fact, according to this data, last year it contributed £1.63 billion to the UK economy, which is alarming, and it also supported 32,000 jobs. So this is really great. So there are always going to be discussions because of the UK's fractured relationship with China, whether or not TikTok should be banned. But if you have a look at these numbers, that is staggering. It's also been compiled by the research from Oxford Economics. So it does go to show that, Gen Z, they're on the money. They know what they're doing. They're not just posting these nice pictures, laddie, with filters. Right. They're making money on these platforms, which is really interesting. And businesses, of course, which is what you were talking about, the SMEs, they're jumping on it too.
Yeah, you're not alone, Juliana. I don't know how to go about TikTok at this time. I just stick to the one I know, Instagram. That's what I know at this time. Thank you so much, Juliana, for the update.
Thank you. Thanks, Laddie.
All right, let's get a quick check on the market now. Let's take a look at what's happening there. We'll see Bitcoin remains range bound there above about $34,000. We see right there the color on the market there. Let's see the color this morning. See the color is about a mixture of pockets of red and green. And we see for the top losers, we're still on the top losers counter at this point, but if we look at the color, let's take a look at the color of the market this morning. Let's see what's dominating. Is it red or green? If you can give me that color of the market at this time. Yeah, that's it. It's green. Green, Bitcoin, marginal green there, but we'll see some deep greens there with the king of the meme coins there, Doge. Deeply in green color this morning. Let's look at the top cryptocurrencies we track this morning. We see Bitcoin holding on there, $34,955. Look at top cryptocurrencies, $34,955 this morning, marginally up. But we see the big movers on the top 100 coins we track, and CoinMarketCap, BNB, Cardano, XRP topping those counters. So let's bring in Femi Adegolu now, CEO Blockchain Vibes. Great to have you on the show, Femi.
Hi, good morning. How are you today, Laddie?
Good morning, Femi. So definitely, everyone's talking about a bull market right now. Talk to me. What's the best strategy to navigate this bull market in the cryptocurrency market?
Yeah, so it's really an exciting month. Historically, November is an uptrend, and next year we're having the Bitcoin halving. That's less than 170 days to go, and of course, a lot of investors are really going to be cashing in and cashing out as well from their investments being made in the bear market. It's actually the longest bear market so far, and we're looking at the entire crypto market cap eating close to 10 billion or more than $10 billion. In fact, Bitcoin started at 20K USD earlier in the year, and now it broke to $35,000. So that's almost 100% profit, and no other asset stock or has done something like that this year alone. So I think that this is the best time and the earliest time to position yourself for the next bull run, which is going to be very, very huge and very, very massive.
Yeah, because with every green market, there's always that risk of buying the top, and nobody wants to buy the top at this time because it takes a long time to make back that profit. But what do you see triggering the next rally? We've seen that jump from the 20K level up to $35,000. What's going to trigger the next rally for Bitcoin?
What's going to be trigger the next rally for Bitcoin? I see it's going to be more of the Bitcoin spot ETFs that has been submitted by BlackRock and a couple of other organizations. BlackRock is the largest asset management company in the world, and for them to be very much involved in Bitcoin, I'm very sure they own Bitcoin already, and a lot of other asset management companies, even banks, and that are not too very vocal about it, but I know they own a lot of Bitcoins. And of course, once the Bitcoin spot ETF is being approved, I think the deadline is in January 10. That is going to be a massive, rollout for a lot of cashing into the crypto market, because people want to see that the US Securities and Exchange Commission is quite backing this particular asset. And of course, with the victory by Ripple, you saw how Ripple moved from less than 7 cents to close to $1. So that's a very huge run. So of course, the Bitcoin spot ETF, there's just a lot of speculations around the market about this Bitcoin spot ETF being approved, and it's not been approved yet. So just imagine when the Bitcoin spot is going to be approved. That is already going to just launch the bull run immediately. And I'm very, very certain that we're going to see a lot of buyers, people buying in, and just trying to FOMO. Because a lot of people say have doubts about Bitcoin, but I'm just really looking at the situation as, okay, yeah, people want to see that, okay, yeah, there's evidence, right? So this is what is going to happen. When the Bitcoin spot ETFs are being approved, then that's the biggest evidence that people will actually get to see that, yes, Bitcoin is really a big deal. And shout out to people like, CEO of Twitter, the owner of Twitter, Elon Musk, and the rest of the influencers who have really been talking about Bitcoin. Is really giving us the confidence that, yes, in the next 1 year or next 2 years, Bitcoin might see close to $100,000 or more. And so we are very, 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 very optimistic with the fact that, yeah, the market is really, really picking up. There's a green candle all over the place. A lot of AI projects are doing quite well. And of course, there's, Bitcoin, Ethereum,
right,
closing soon to $1,000 on the right. So, yeah, it's going to be a very, very interesting one in the next couple of months.
We'll definitely be looking out for that.
Next year, talking about this.
All right, we'll definitely be looking out for how it all plays out in this market. Thank you so much, Femi Adegolu, founder B-Chain Academy. Thank you.
Thank you very much. Have a wonderful day.
All right, so that's how the market is looking today. Talking about the crypto market, is still a greedy market right now. But looking out for how it plays out today. To wrap on the program, don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you again for watching. I'm Ladi Williams. Have a profitable day.